Caitlin. Hey, everybody. Welcome to the monthly ERC seminar. Happy April. Hope the lunch is fitting today. We've got a great speaker. Dr. Caitlin Waite's going to introduce her in just a minute. Besides that, just good to see everybody. Welcome, welcome. Next month will be our last of the academic year for our ERC seminar. One quick reminder, AIHA Connect is coming up end of next month. Is that end of May? Right? Yeah. I've got one more spot open for the exhibitor booth. If anybody wants to hang out with me in Kansas City at an exhibitor booth at the AIHA Connect conference. So you can get at me if you want to do that. Anyways, I'm going to hand this over to Dr. Caitlin Waite, introduce our speaker today. There you go, Caitlin.
Thanks, Chris. Like Chris mentioned, I'm Dr. Caitlin Waite. I'm the Deputy Director of Outreach for the Johns Hopkins Total Worker Health Center in Mental Health. So I'm really excited to have our speaker here today, Ms. Cindy Williams. Ms. Williams is the Executive Director at WorkLife Partnership, an organization dedicated to fostering prosperity for both individuals and businesses. Ms. Williams is a graduate of St. Lawrence University with a BA in English writing and a minor in sociology. Her work focuses on driving workforce resilience and organizational success through innovative leadership. While at WorkLife Partnership as Chief Operating Officer, Ms. Williams led programs and solutions to drive employee resilience, engagement, and well-being, strengthening organizations from the inside out. Her work includes launching a safe lending initiatives for low and middle moderate income employees, speaking nationally about the critical connection between financial well-being and health, and is a leader in fostering cross-sector collaborations. So join me in welcoming Ms. Williams.
Thank you, Caitlin. I really appreciate that. Hello, everyone. Thank you for your time today. I'm excited for the opportunity to talk about the impact of financial well-being on an individual's overall health. As Caitlin mentioned, it's a topic I've spoken nationally and publicly on a few times. And so I'm excited for this opportunity to share this content with you. And I want to thank Caitlin for inviting me to join you today. So with that said, I will move into just a very brief introduction, since Caitlin kind of read a bio that I'm like, that's old. I need to update that. But that said, I am Cindy Williams. I'm the Executive Director at WorkLife Partnership. I've been here for 8 years. I did move into the Executive Director position about 3 months ago in January of this year, 4 months ago now, I guess, after serving as the Chief Operating Officer for my prior time. Just so you know, as Caitlin mentioned, my background is not in healthcare or health sciences. The presentation that I'm going to share with you today was really created using a combination of WorkLife's own data and observations, along with relevant external articles and research. And I will share out the deck as appropriate at the end of this. And there are a number of references, article links, and so forth in the last 2 slides that if anything piques your interest and you want to research it further, then please feel free to do so. So just a little bit about WorkLife Partnership. We were founded in 2009, and we are a nonprofit organization dedicated to economic opportunity for low and moderate income workers across the country. We believe that prosperity should be possible through work. Our programs are deployed inside of businesses so that vulnerable employees can get the assistance they need at critical moments. We're committed to ensuring that everyone has access to resources that enable them to be successful at work and in life. So we are based in Denver, Colorado, but we serve low and moderate income workers across the country. In 2024, we served about 2,800 unique individuals across 34 states. And we currently partner with over 50 individual employers to ensure their employees have the support that they need to ensure stable employment and find increased pathways to economic opportunity. We help through our programs workers directly, but also aim to increase awareness, understanding, and empathy among their employers about the challenges faced by their employees. We believe that employers have a responsibility to offer quality jobs that support the success, well-being, and financial attainment of their employees. So we have several different programs. I'm going to give you a very high-level overview. This is really context setting for really the meat of this presentation, which we'll talk about really the connection of financial stress and health, and why employers should care about those things. So our core program is a resource navigation program. That's what we launched back in 2009. And it provides individualized one-on-one support to employees inside of business so that they can overcome whatever barriers they might be experiencing. It is really anything and everything that our resource navigators who deliver that service can provide support with. That's everything from basic needs, so helping access safe housing, overcome food insecurity, to helping people with goal attainment, maybe realizing a dream of home ownership. So really across the spectrum in terms of what we can assist with. So we've been doing that work for about 16 years. And in that 16 years, we've really come to understand the unique challenges faced by low and moderate income workers. And so what emerged from that is several of our other programs and supports that we provide embedded in our services. And these are really all, I think, our way of addressing the overall well-being of the individuals that we serve through our programs. The next one on the list that we launched in 2018 is our Healthcare and Health Benefits Navigation Program. It very specifically helps individuals understand and access their healthcare benefits that are offered through their workplace, or in the cases where they don't have benefits offered, perhaps find healthcare through other channels. It also includes helping people navigate health insurance, which is obviously wildly complicated these days, choose the right benefits plans for them and their families, and then navigate those plans once they're enrolled. So finding the right providers, making sure that they're using their health benefits wisely. And then we also do provide support with medical debt, helping individuals understand bills and figure out how they can pay any medical debt that they might have outstanding. We also, as a result of what we learned working very closely with our low and moderate income clients, understood that, and we'll talk a lot more about this further into the presentation, that financial stress is a huge component for individuals. And there's really, when you're making low and moderate income wages, it's tough to have any savings set aside. And so in 2020, we launched a small dollar loan program, which provides a safe lending option to individuals for whom safe lending is not typically available. And basically what these loans are they are $1,000 to $5,000 loans that are made available through the workplace and repaid via payroll deduction, so that individuals who otherwise might have to revert to something like an unsafe predatory payday loan have an option that's inside of the workforce. We also have launched in the last several years coming out of the pandemic, where we saw a really strong increase in mental health issues in the workplace, a mental health care access program, which allows access to individuals for clinical or non-clinical sessions with clinical or non-clinical therapists. So again, we saw a greater need than traditional employee assistance programs, for example, could keep up with. And so we decided to embed that in our services as well. Also, not everyone at every business has access to mental health care through their insurance. If it's a ride along on health insurance, for example, then individuals who are not enrolled in the health insurance program at that business may not have access to that employee assistance program. We also look at, because so many of the issues that we work with individuals on are financial in nature, we do embed a whole host of financial supports in just the work that our resource navigators do. That includes a lot of coaching around financial values, household budgeting, help with taxes, those types of things. But for individuals who want to do a bit of a deeper dive and really pursue more long-term financial counseling and coaching, we do partner with Green Path Financial Wellness to allow individuals to get access to those tools and resources as well. And last but not least, and this is something that's been embedded in our services forever, because we are a nonprofit, we are able to provide direct cash financial assistance to individuals when we've exhausted all other resources. And that really is our supportive service program, where we're helping individuals with an unexpected expense. Perhaps they have part of the money saved, but not all of it. And we can, using our nonprofit fundraising, be able to help support with some of those expenses. So working the way that we do, we have kind of a unique point of view. We take a non-clinical approach, and that is informed by the data collected while we deliver services. So that's what evolves our programming. That's what evolves how we deliver what we deliver to the individuals that we serve. Our interaction data is complemented by feedback gathered from client surveys that we send after individuals receive services. And our interaction data contains a whole host of information, including kind of key contact details and demographics, but most probably critically and uniquely is that we are actually asking questions of individuals when they come to us for help. So we're saying, hey, what are your concerns today? What are you experiencing? And that is a unique point of view, because a lot of times businesses who are surveying their employees to find out, how are you doing? How are you feeling? It's a point in time. And if that individual isn't experiencing something in that moment, then it doesn't necessarily convey to the employer, this is what's really going on with this individual. So we kind of have a unique point of view from that perspective, because we're talking to individuals in the moments that they're experiencing issues. So we also take a full circle approach to our services. So what that means is that we engage with businesses who provide our services as a benefit to their employees. And in the process of working with those individuals, we gather data that as I mentioned, the demographics and the issues that we then aggregate and send back to those employers to help them understand what's going on with your workforce. How can you address these issues that your workers are experiencing? Because the goal here is to help employers understand that they have a role to play in overall employee well-being. And then the last piece of data that we actually have kind of unique access to is we have access to all of the employer benefit information, because that becomes a key component in how we help individuals navigate resources when they're experiencing an issue. So if someone has a benefit available, for example, that can help them overcome a challenge, we'll go to that first so that they can access those valuable employee benefits that they may have. And so with that sight line, not only can we help individuals access those benefits, but we can also understand gaps. So as we put together the information that we receive from working with the individual employees and that benefits information, we have more data and intelligence to bring back to the employer to say, you know what, you have a lot of employees who are experiencing a transportation issue, and yet you don't really have anything that addresses that, whether that's a bus pass option or something like that. Perhaps that's something that you should consider, because a lot of your employees could benefit from it. And maybe that's a more impactful benefit than something else that they're actually offering. So kind of a unique point of view on the issues that low and moderate income workers are experiencing. And sort of key impact measures really do tie for work life back to employee well-being. So we think about how are the services that we're providing both to the employee and the employer, how are they helping the overall workforce become healthier, happier, have higher levels of overall well-being. And so those key measures are reduced levels of stress, increased confidence and self-efficacy, improved personal empowerment, decreased financial concern, preparedness for career advancement, less distraction at work, missing fewer days of work, so less absenteeism, an individual's understanding of their benefits and how to use them, their likelihood to remain with their employer and to remain in their job for longer term, which are all components of overall well-being. So just to contextualize a little bit about the individuals that we serve and sort of kind of a basis for a lot of our understandings of the issues that they are facing as it pertains to their overall well-being. The median wage of someone served by WorkLife's programming is $20 an hour, which is and that means that basically 90% of the clients we served in 2024 are living below 80% of their regional AMI. So that's the area median income for the individuals that we're serving. So it's actually, a big indication that while these are hardworking individuals, their wages just don't go far enough no matter where they're living. 80% of the individuals that we served last year couldn't afford all or part of a $300 emergency expense. I'm going to talk more about that in a couple of slides here, but essentially that means some people maybe had, part of that $300, but definitely not all of it. And so they were really struggling when those emergencies arose, and they will. We all know that emergencies happen to all of us, regardless of whether we're making, low, moderate, or high wages. The primary concern among those we served and serve, and this is perennial, is financial, and that's closely followed by housing concerns. So those two things are intrinsically tied. When you're making 90%, when you're making 80% of AMI, typically you're probably house cost burdened, and so it's not surprising that many people come to us with housing concerns. 75% of the clients we served last year were female. That is actually because we have a concentration of employer partners who are in the healthcare industry. about 58, just under 60% identify as BIPOC. So just to contextualize sort of the basis of some of our data from a demographic standpoint. And we do typically focus mostly on frontline workers. So in the businesses that we partner with, we will provide services to anyone who comes to us, regardless of whether they're making low, moderate, or high wages. However, the majority of folks that work with WorkLife Partnership are in fact low or moderate wage workers. And to be clear, all frontline workers are not necessarily low or moderate wage workers, but for the sake of sort of the expertise and our observations around financial well-being, that is the population that we more or less focus on. And just some context on that population. So a 2022 McKinsey report estimated that about 55% of the US workforce is employed in hourly or salaried frontline jobs with an average wage of just $33,000 annually. The Financial Health Network's Financial Health of Low Wage Workers report from 2023 asserted that about 44% of the US workforce is actively employed in low wage work. So that's specifically low wage, not moderate wage. Lower paid frontline jobs are prevalent in certain industries. This is no surprise to anyone. We all went through the pandemic. Manufacturing, healthcare, hospitality. Think of those businesses that didn't close down, didn't send everyone home in the pandemic. That's where a lot of those frontline jobs exist. And that same McKinsey report, and I think this is a really important piece, really, when we talk about the ability to have economic mobility, talked a lot about how frontline positions are disproportionately held by Black and Latinx workers, and that those workers actively seek promotions and career advancement, but they are often overlooked for that advancement. So they're not really finding opportunities out of those frontline low and moderate wage jobs. And then because so many of those frontline jobs are, again, disproportionately held by people of color, there are systemic barriers to accessing tools that would enable greater financial stability, economic mobility, and that includes access to safe banking, savings programs, those types of things. And just a quick note on the images for the rest of the presentation. These are real clients of WorkLife Partnership. So we have a worker voice storytelling program, and we have clients who actually come and they tell us their whole story. So we can actually present them in more detail than just what the demographics and the aggregate data share. So this is one of our real clients. I like to call that out. So you know you're looking at real clients from WorkLife. So we've now talked a little bit about who these individuals are, the frontline worker. We've talked about the fact that they're making low and moderate wages. What does that really mean? So it means, generally speaking, that they are more financially vulnerable than workers who are making higher wages. So according to the Financial Health Institute, financial health is having the ability to spend, save, borrow, and plan in ways that enable someone to be resilient and pursue opportunities. That is amazing. And too few people in this country have financial security. And I would argue fewer and fewer will, as we see the impact of the changes in our economy that have started to take place over the last few months. There is just not going to be as much money available in everyone's paychecks as everything gets more expensive. It's already really expensive, and it's only going to get worse, especially for those who are making low and moderate wages. So a 2025 bank rate report, they do a American Savings Report every single year, reported this year that 42% of Americans lack any kind of emergency savings. And that is backed sort of by our own data, which says that about 60% of the folks we served last year didn't have $300 set aside. So again, 80% said, hey, I might be able to, well, 20% said I might be able to afford part of this expense, but the other said, listen, I don't even have $300 set aside. And in fact, low and moderate income workers are less likely to have savings and more likely to be scraping by because they are living paycheck to paycheck. They're generally living in a world where they have maybe just enough to get by every month, but when that emergency comes up, they're going to be kind of struggling to figure out how to pay for it. And when you're living paycheck to paycheck, and I have done this in my life, and I'm sure many of you have too, it means you're kind of living in a persistent state of financial precarity. I take that term, which is general, but I've taken it from a Stanford Social Innovation Review article from 2019 that specifically talked about how living with financial uncertainty, because you're one emergency away from sort of a real problem, generally puts you in the state of precarity. And that article was specifically focused on why that matters to businesses, why that is an important prerogative and imperative for businesses to be paying attention to. And that's why, so much so, I tie the financial health of an individual to their overall health and well-being. And we're going to get a little bit more into that. So health consequences related to feeling financially insecure, financial stress, health outcomes. So I'm going to go into each one of these in just a little bit more detail. So the first piece is when you're living with a persistent level of stress, you're living with a persistent stress response, which can increase your cortisol levels. Increased cortisol can lead to chronic inflammation. It can put strain on interpersonal relationships, and it can lead to longer-term psychological distress. So kind of digging in deeper on each one of these things. So long-term activation of that stress response has been known across many, many studies to cause persistently high cortisol levels, and high cortisol levels are known to disrupt normal body functions and potentially cause a whole host of things that none of us want to deal with, including anxiety, depression, headaches, heart disease, sleep problems, and even mental impairment, concentration impairment. And so, it's these types of things that can lead to more chronic issues down the road. So if you're constantly living with the fear that you are your one emergency expense from, a real problem, then you're probably living with heightened stress pretty much day to day. And when that emergency comes along, you're definitely living with that stress. We're going to talk about that tie to work in a few slides, but we'll go through these a little bit one at a time. So chronic inflammation. So 2016 National Institute of Health study drew a tie between financial stress and chronic inflammation. The interesting thing in this particular study was that it noted that the complexities of the relationship of psychological well-being and social perceptions of psychological well-being was actually impacted by the individual social, the social determinants of health that they had access to. And so with this, it's basically saying, listen, not every individual is going to necessarily experience some of these negative health outcomes because they're dealing with these heightened level of stresses. Because there are other factors at play, and those are often the social determinants of health. So, what is the community in which this individual lives? Do they have a supportive family or friend network around them? Are their basic needs being met? So your response to stress is definitely in correlation to those other components supports that you have around you. So it's not to say that everyone's going to experience chronic inflammation because they have stress, but definitely when you have, you're lacking some of those other social determinants, you're more prone to it. Chronic inflammation in particular is linked to a host of other different health concerns, or similar to the heightened stress response, heart disease, diabetes, cancer, arthritis, bowel diseases. So again, these can become chronic or, lifelong illnesses that individuals are living with because they're kind of living in that constant state of stress. Psychological distress. So the psychological distress is defined by the American Psychological Association as a set of painful mental and physical symptoms that are associated with normal fluctuations in mood in most people. In some cases, however, psychological distress may indicate the beginning of a major depressive order, anxiety disorder, schizophrenia, somatization disorder, or a variety of other clinical conditions. So not great. And an NIH study found that that financial worries significantly impact psychological distress. So again, some of those external social determinants of health can be a mitigating factor. So if someone has a strong support network around them from their community, their family, their work, then that can actually be mitigated. And I mention that because work is a key component of that. In fact, Dr. Angela Jackson has dubbed the term the social determinants of work, meaning that work can be a way to give support to individuals who may lack some of those social determinants outside of work. They may not have a strong community. They may not have a strong family network. So another study, just while we're talking about the psychological impact, actually highlighted the impact of ongoing financial stress on self-esteem. And basically, what that breaks down to is if you're responsible for taking care of your family and you're really struggling financially, that's eventually going to erode your own self-esteem, your own self-efficacy, feeling like you're able to take care of the things that you feel responsible for. And then last but not least, interpersonal challenges. So when you're feeling stressed, and I'm sure we've all experienced this, we're not as happy. You're feeling stressed, you're tunneling, so it's harder for you to find joy. You may be less social, so you may experience higher levels of social isolation. Your cognitive function may be impaired, and that's again, we're funneling, we're focused on one thing or a small subset of things as opposed to being able to kind of think more broadly and openly. Your decision making may be impaired. We see that all the time with the individuals that we're working with. When they're experiencing an emergency of some kind, they can't be thinking about all of the different components. And that's one of the ways that, we really provide that side-by-side support to help people, with those kind of, they're not seeing the full picture. So our navigators can help them maybe see that full picture. More impatient. I know when I'm feeling stressed, I'm definitely more impatient, which makes me harder to be around, whether it's my family members, my colleagues, my employees. No one wants to be with me when I'm feeling impatient. Poor communication, especially with family members. So this is another piece that's been studied really, really carefully, is that when people are feeling financial stress, they're actually less likely to speak with their spouse about it, even though it may be the most important time to talk about finances. So that poor communication just breaks down trust, breaks down barriers. So these are all things that eventually have an impact on the individual, both in work and in life, and certainly an impact on their health. And then less open to feedback from others. So, in the workplace, this is pretty specific to the workplace, but you're feeling stressed about something that's happening outside of work. Your supervisor comes to you and gives you feedback on a project, or, tells you about a mistake that you made. You're more likely to react defensively and not really be able to take that feedback and parse it apart and understand how to improve from it. Over time, that can create performance issues. So again, interpersonal challenges that come from kind of these persistent levels of stress that you might be dealing with. So what are the consequences of all of this? So some of it is pretty clear. If you're experiencing sort of real health outcomes from this stress, then you may be needing to use healthcare more often. If you're insured, that means you have increased co-pays, you have deductibles that you have to pay. So now we're increasing that concern from a financial standpoint because we're incurring now medical debt. You may have increased absenteeism because you're missing work because you don't feel well, you're experiencing health problems, or you're going to doctor's appointments. You also have an increased risk of substance abuse or other self-medication, simply because maybe you're not going to the doctor and you're in pain, and so you turn to self-medication as a solution. Maybe it's job loss, voluntary or non-voluntary. For that individual who couldn't take feedback maybe once, twice, or 3 times, perhaps they lose their job. Again, these are all things that then compound on themselves. And I want to say that one of the things that we work with employers on is helping them understand what can often be under the surface for individuals. So if you have an employee who's been doing a great job for the last 2 years, and all of a sudden things start to change, the dynamics change, it doesn't necessarily mean that there's been this big shift for that individual. It means there's probably something else going on. And one of the things that we really work with employers on is helping them understand that there are things that are happening behind the scenes. And by the way, as an employer, you can help with it. It's part of helping your employee be healthy and successful. Additionally, just negative friend, family, and colleague dynamics. So again, you're feeling stressed, you're feeling like you can only focus on one thing, you're not going to be your best self in those relationships. And then of course, the compounding financial strain that comes from all of this. So you now are, maybe you have more medical debt, or, maybe you did lose your job or your hours were cut. Now you're even in a more tricky financial place. So very real consequences on the individual and their ability to be successful, certainly overall in life, but definitely at work, and work as an agent of income and of self-efficacy and all of those other things that we can take from a job, and job satisfaction starts to erode when we're not feeling like we are bringing our best self. So just to kind of shine a light on where employees turn when they're experiencing financial emergency right now. So there's a whole host of different places that an individual can go. And, if someone has a strong social network or family network, they may be able to turn to a family member for support, or they may be able to turn to a friend for support. But oftentimes they kind of fall into a couple different buckets. There's the independently sought. So you could put money, you could put an expense on a credit card. Well, that's if you have access to a credit card. A lot of people can't get access to a credit card because of poor credit or no credit. They may turn to payday lending, which is notably predatory, and, depending on what state you're living in, can incur up to 300, 400% interest rates on the initial amount borrowed. 401k loans, which are not a terrible option. You're going to pay yourself back over time. But if you lose your job, that loan's going to come due immediately and you're not going to have the money to pay it, which means you're going to pay a 10% penalty on keeping that money. Auto title or pawn loans. So here you're putting up something of value to get some money immediately. Risky, especially if you depend on your car to get to work. So these are all some options that are out there. It's not exhaustive, but some of these are pretty risky for the individual. There's also employer secured options, which aren't all bad. We're going to talk about some different options in a few minutes, but these aren't all bad. So payroll advance, someone comes to their employer and says, hey, I have this emergency expense. Can I get an advance on my next paycheck? And the employer says, yes, that's not a problem. Well, the challenge there really for the employee is now their next check is going to be smaller. And if they're already living paycheck to paycheck, then how are they going to make that stretch? And then for the employer, if that individual ends up having to leave work, then they may never get paid back. So it's a liability for that employer. Some employers, especially larger healthcare employers, actually offer they fund either through themselves or their foundation loans or grant programs. These are amazing, and I truly support employers who are looking at this. The challenge with these programs is not that they exist; it's how they're administered. So someone, whether it's a committee or HR or some entity within the organization, has to decide who gets the loan, who gets the grant. And with that comes some implicit bias. And none of us can shed our implicit biases. We have to be really conscious of them. And I think we've seen this over the years working with employers where we all make judgments based on our own financial values. And it's hard for those programs to be administered without those financial values for the people who are making those decisions coming through. Earned wage access programs, again, designed to help people connect to their wages faster than having to wait until the next pay period. Not a bad thing, but if you're living paycheck to paycheck, that money you accessed in the middle of the pay period is going to come out of your next check, which means you're going to be short. And that becomes sort of, you're just kicking the can down the road at that point, and you're not going to really be able to get ahead. So where could they turn? So here's just a sampling of different types of workplace financial well-being programs. I'm not going to go into a whole detail around all of them, but certainly small dollar safe lending that can get repaid via payroll deduction. That's a great option. It also is a sticky option. If you have a loan out with your employer, you're more likely to stick around until it's paid off. Many of those programs also offer the option for someone to roll in their amount that's getting deducted to pay back the loan into a savings account after the loan is repaid, meaning that you're going from, okay, I'm repaying the loan and now I'm getting ahead of it. I'm going to start saving this money. So within, a few months time, 4 months time, I might have that money saved if another emergency comes up. Matched savings programs. I am a huge fan of matched savings programs. So, a lot of them, most 401ks are almost permission to play for employers at this point, a great option for saving for the future. But a lot of people, especially if you're living paycheck to paycheck, they are not thinking about the future. Whether that's right or wrong, they can't think about the future. And they really would be more interested in having something they can set aside so that if they wanted to have some available cash nearer term, then they have access to that. So one program I really like is Sunny Day Fund. That allows the employer to match or not what the employee is saving. And then they have some employer incentives that can kind of kick in, enabling that employee to really think about how are they saving for the future. Down payment assistance program. So here's where an employer can actually help employees access down payment for buying a house. So we interviewed a bunch of our borrowers in our loan program last year, and the number one goal that they all shared was being able to buy a home. They recognized, number one, owning your own home and feeling you have a safe place to go to. That's wildly important for your sense of well-being and your health, but also owning your own home is a channel for wealth creation. So when employers can figure out solutions for that, it's great. Embedded financial coaching and debt management, things that go beyond what your 401k provider might present on an annual basis. So what we really have seen, and there's studies that support this, is that employers who understand that each of their employees are in a different place, those employers really, and they're putting solutions in place for those different types of employees, they're the ones that see the best benefit in terms of employee well-being from what they're doing. And so that's saying that not everyone can do a 401k, so I'm going to offer a 401k and a match savings program. Or, you know what, we have a lot of younger people who are dealing with student loans. So why don't we have a student loan repayment program? Or we have a lot of folks who maybe they have an associate's degree, and there's some credentials that would really benefit them. So let's put in a education payment program so we can help those people really be able to advance their skills and their education. So I think choosing the programs really depends on who is in your population, and that's where employers having access to that data can be really helpful in terms of finding solutions that are impactful for their employees' financial well-being. And there's the business case. So, this isn't just about how we, make the right decisions because they're ethically right as an employer, but because there is a true business case to be made here too. So the cognitive tax I talked about before, it causes distraction, disengagement, and increases the risk of injuries, potentially mistakes, and even workplace violence. Some estimate that stress in the workplace costs businesses $300 billion per year. And that's because of that distraction. It's because of absenteeism. It's because of turnover, all those things that are a huge expense for business. And then increased employee health issues, which result from stress, result in absenteeism, turnover, and increased healthcare costs. So, if you've ever worked on your company's healthcare plan, you understand that the health of your employees directly impacts your premiums year over year and those increases. And so if your employees are becoming less healthy year over year, your costs are going to increase. So what's the impact of helping employees address this financial precarity? Obviously there's some real financial benefits if your employees aren't absent as often, or if they are being more attentive at work and not making mistakes. So there's real actual financial benefit, but you're also decreasing that employee stress, which again, may diminish someone's, risk of health concerns. You have increased engagement, you have increased loyalty. You've probably helped them improve their performance, which sets them up for potential advancement and promotions. And then they're able to, as they advance through their careers, potentially access tools and resources that are often only available to higher paid workers, such as increased schedule flexibility, right? So where a knowledge worker who has the ability to work from home and a frontline worker doesn't. So if someone's able to advance through their career, perhaps they're able to move into a position where they do have increased flexibility. So there really are a lot of tangible and intangible impacts of really thinking about the financial well-being of your employees. These are two quotes just from a couple of our clients recently. And the one I love is the one at the top, which said, take a lower paying position just to work with a good team in a positive environment. And I think that's so true for most people. So I think, when we think about financial well-being and total worker health, I think the time is upon us to think beyond those actions that we take to protect our employees inside the workplace, but how we ensure the financial safety and stability of our employees and their families now and in the future. And I had the opportunity to present at the Total Worker Health Conference in Maryland a couple of years ago. And, I sat in a lot of sessions that talked about OSHA safety and how you created a safe working environment. And that's all extremely important in terms of worker well-being and health. But I think some of the well-being issues that we really focus on are the ones that are less obvious and the ones that are happening outside of the workplace. And I think that's why it's so important for employers to really be thinking about the whole human being when they think about their worker health and well-being. And the last slide is just, a reminder that anyone who's ever struggled with poverty knows how extremely expensive it is to be poor. A quote from James Baldwin, who I adore, and probably this quote is truer than ever at this point in time. Last couple of slides are references and further reading, which I will share with Caitlin or Keith so that they can be shared with you. And I will stop sharing my screen so I can take any questions if there are any. I'm happy to.
Thank you very much, Ms. Williams.
Thank you.
Let me try to move this screen around so that I can see more people in case they have their hands raised. You know what, Keith, if you're listening out there, I just figured it out.
Thank you so much, Ms. Williams. That was a great presentation, and I think that it was just very timely. And just as you mentioned, I think it's so important to think about financial well-being in the workplace and looking at the employer and employee holistically, not just the safety, but also the mental health aspect, and it goes hand in hand. I love how you elaborated on the impact of the employer as well, and the benefits of it to have workers really feel secure in their position. I think there is a question here on the chat. I can read it, or Chris, you want to read it?
Go ahead. If I click the chat box, it's
Oh,
going to cover up.
I'll do it. No worries. It asks, does your organization engage in outreach or lobbying to promote financial security in the workplace?
That's a great question. As a 501c3, I can't lobby. I would have to change to a 50c4, but 501c4, but it's actually something that recently came up in another conversation where I think there is more policy work that we could do. Because I believe that, there should be more incentives for employers to be investing in more holistic financial supports and well-being supports for their employees. Things like, you can do a 401k pre-tax, but you can't do a savings account pre-tax. Things like that could be changed over time. So I think there's definitely more work we could do in that area. We don't do a ton of it right now, mostly because we're a pretty small organization. We're only about 17 people. So capacity is more of an issue than anything else, but I think it's a good point, and I appreciate the call out. You're welcome.
Do we have any questions in the room? Go ahead, Mary.
Yeah, so I was curious about, do you formally study follow-up? I mean, I know you shared with us some anecdotes, but how do you track your own progress over time?
Did you hear that, Ms. Williams?
I can't hear it. The audio is a little tough to hear, so if you could repeat it, that would be great.
I just unmuted the ceiling
Okay,
mic.
yeah, ceiling mics are on now. Okay, so well, thanks so much for your presentation, and I love the work that you're doing.
Thank you.
I wondered if you could talk a little bit about how you are, reflecting on your own work and following and sort of studying your own progress. I know you shared some anecdotes and, sort of little stories, but do you have a specific, program in place for your own evaluations?
Thank you. That's a great question. It's a timely one too, actually. We did a survey in the beginning of this year of anyone who'd received services in the last 3 years. And it was like a touch point, just a pulse. Where are you now? It wasn't designed to be any kind of academic study or establish correlation to working with our programs, but to say, where are you now? And what we learned in that survey, and again, pretty informal, but was that 90% of the folks who responded are still at the same company and 70 are in the same job. That's actually not the outcome we want. We're happy with the job, the employer placement, like that's great. It actually says this is a group of people who are loyal to their employer. They are resilient, so they're overcoming the challenges that are thrown their way. And we've all had a lot of challenges in the last few years, but they're not advancing. And so one of the things that really has made us focus on is how do we drive those long-term economic gains for the individuals that we're supporting? So we're creating stability, we're helping create stability, I should say, and that's really, really important foundation for longer-term financial and economic gain. But it isn't the end game for us. We've always long believed that job stability should be a starting place for increased financial stability and economic mobility. And so we're really working on designing sort of the next, I'm calling it WorkLife 3.0 right now, to say, how does our team and the opportunity, the moments we have working with these individuals help start to create a longer term impact with those individuals who are looking for that. We know it's never going to be 100% of the 2,800 people we serve every year, but it could be a subset who says, I'm having a struggle getting to the next stage. Like, I love my company, but I don't have money saved to go to a credentialing program, or there's not a real refined career path here. So I think we're in a unique position because of the work we do so closely with employer and employee to start to build that. So otherwise, how we do measure our impact currently is we look at increased rates of stability, job retention, our employees reporting reduced stress. On the employer side, we have a very strong employer retention in terms of their tenure working with us. So there are those types of impact measures already in place, but we're really trying to build on that now. Thank you for that question.
Thank you. Anna, go ahead.
Thank you also for your presentation. I have a question. Is there a way, do you have a model for the individual to sign on? Or this is usually through the company, right? So what if you're like a small company or a contractor? Do you have something to help these people?
Yeah, that's a phenomenal question, one long debated at WorkLife Partnership. So we do work with organizations as small as 5 employees. However, our financial structure, because we are a social enterprise, so we're a nonprofit, we're a social enterprise. The employers who we work with pay us a fee for service to deliver what we deliver to their employees. When you're a really small company, you've got 5 employees, the financial model doesn't hold up. So that's why this is a long debated question here. Well, how we do serve those populations now, though, is through partnerships. So as an example of that, we work with a foundation in Washington State who basically has granted us funds to serve individuals who are working in the family and child protective services sector in their community. And so they're especially vulnerable frontline workers because they generally have lower wages. They have a higher education credential, which means many of them have student loans, and they're in high burnout jobs. And so what this funder is asking us to help with is help us, one, create more stability with these employees. They're working for agencies who don't have a lot of money to spend on, a benefit like what we offer. And at the end, we can identify what are the barriers for success for those individuals who are in, from their perspective, and mine too, a really critical sector in their community. And so there's ways that we're able to do it. It's just not, they're situational, they're not replicable. So I think it's a gap. We've talked about, a subscription model where an individual who leaves an employer, for example, could pay a small subscription fee a month to have access to the resource navigation. I think what stops us from that is our strong affirmative belief that the employer is part of the solution when we think about the social determinants of work, and that, for a lot of individuals, work may be the place of stability that they don't have in other places. Not always, but in some cases. It's a great question, and one we still grapple with.
Great, thank you. Do we have any questions? Any other questions? Well, Cindy, thank you so much for being with us today. Appreciate you sharing.
You're very welcome. Thank you for the opportunity. It's been nice to have this conversation today.
Absolutely.
Yeah, thank you so much for coming, Cindy.
Yeah, my pleasure. Thank you so much. I will sign off now. I appreciate it. Hope everyone has a great week.
You do as well. Thank you.
Thank you. Bye-bye.
Before I guess everyone logs off, I would like to mention that the Total Worker Health Center, the POE Center, and the ERC and other collaborators with the university have put together a website, and I'll put the link on the chat. But Chris, you can direct people in person, which navigates through a little bit of strategies that people can use to mitigate through job insecurity and job loss. So kind of tying into that financial insecurity, just strategies for this, if you find yourself in this position or are working with employees that are finding themselves through job insecurity or job loss, just some things to maintain mental health and well-being and resiliency during that period. And so I put that link in the chat, use those resources. Thank you again, and I'm glad you guys enjoyed the speaker.